Well, first of all, welcome back. Now, in today's episode, we have really a common question. Is real estate the best or is the stock market the best? Well, I'm here to tell you they're both great, but you need to know what you're doing. So I'm partial to real estate, and I'm partial because I worry about the ups and downs of the stock market. Now, what do I mean by that? Stocks can go up much faster than real estate. By the same token, depending upon the news, it can go down much faster than real estate. So I'd rather have a market that's going up steadily, and I feel more comfortable with that. But a lot of people like to buy stocks, so I'm not negative on stocks at all. But there's a common question, which is better, real estate or stocks? I'm partial to real estate. That doesn't mean I don't like stocks. Nothing wrong with that. So most people are going to advocate that they like stocks for a reason, and the reason is they can get in and out of the market very quickly. They can buy stocks on margin, and terrific margin. They can make money so quickly that they make money today and sell it tomorrow. Okay, that's not going to happen with real estate. So I'm a real estate advocate, and I've been involved in an alternative part of real estate, sort of a subsection of real estate for the past 30 years. And I'll explain more about that as I move through the episode. So you'll learn it, you'll learn both as we go along here. Now, my name is Ted Thomas. I've been involved in alternative parts of real estate for over 30 years. Now, that alternative part of real estate, it's a subset, is really tax deeds and tax liens. Now, as soon as you hear that word lien, you start worrying about it. But tax liens are where you can actually make money. Now, this is a highly lucrative part of the business. Now, it's really little known. A lot of people don't even know about it, but it's very lucrative once you learn how to do it. Now, is it going to be as quickly as moving as stocks? Absolutely not. So both of these businesses have a lot of idiosyncrasies. By that I mean the stock market, you need to know the rules. You need to know when to buy, when not to buy. You need to listen to the news. You need to be right on top of it all the time. You need to really listen to the news. Whereas real estate, you're going to buy, and it's more of a long-term investment. Now, I'm not buying for 10 or 20 years long-term. Long-term for me is going to be 90, 180, 270 days. I want to buy and be able to quickly sell and make my profits. But I'm not going to make it anywhere near as quickly as you could do with the stock market. So the stock market has a lot of unique formulas. Now, can I quote those to you? No. But I can tell you, you can learn that very quickly. There's lots of schools in it. They'll teach you that. Not only will a broker teach you how to do it, but the school system will teach you, and you can buy lots of books on stocks and learn how to do that. Now, both of these businesses are unique, but they both require that you get educated. So I'll be right back. Don't kid yourself. If you think you're going to make money quickly or easily in the future, it's not going to happen. It's absolutely not going to be like putting money in the bank and making a 10 or 12 or 15% return. It's not going to happen that way in the future. Okay, that doesn't mean that you're doomed and you're not going to be able to make money. Your life is going to be okay. You're not going to be depressed and not able to make money. But it's going to be a lot different than it was in the past. In the past, we could sometimes put money in the bank and make 10% a year. Well, what's better than that? You could just sit on your rusty dusty and make 10% a year. Yes, you had to pay Uncle Sam on your profits, but you didn't have any risk. So that was good. Well, now banks are paying like 1%. You still got the same risk you had, but what's your upside? There's not very much upside. So the point is, there's no more easy ways. It doesn't mean that you're going to have a life of regret, but there's not going to be any easy ways to do that. Now, the stock market, as I've said so many times, is volatile on the upside and volatile on the downside. All right, now in the past few years, the market has moved tremendously to the upside. All right, but every few years, for some reason, or for a lot of reasons, the market will crash and drop. And it drops for many reasons, not just the news, but people figure out, wait a minute, these stocks are generating high prices. If you had to really go judge where you're buying a good ratio for your money, you're going to find out maybe you paid way too much for those stocks. All right, but there's a lot of enthusiasm in the market. People love to talk about it. So the stock market is probably going to win in an awful lot of arguments when it's across a cup of coffee or a cold beer at the bar. So the stock market's probably going to win those. But real estate's a lot different. It moves, but it moves very slowly. Sort of like inflation, maybe a little bit more than that. But every once in a while, you can cut a good deal by buying low and buying like I do. And I'll tell you about that in just a few minutes as I get into it. Well, the real estate market isn't any better than the stock market. Okay, real estate's good for people that like real estate. Stock market's good for the people that like stocks. All right, Are they always simpatico and stay the same? No, absolutely not. Do they both go up at the same time? No, absolutely not. So I picked one, and it's real estate, and I picked a subsection of the traditional real estate because I wanted to know what kind of money I was going to make right away. I come from the real estate business, and I had made money previously, but it took a long time. So 30 years ago, I discovered tax deeds and tax liens. All right, now that's, as I say, a subset. And what it simply is of all the millions of properties in the United States, there's 100 million of them, what's going to happen, a certain amount of those properties, people aren't going to pay tax, so they'll go to default. All right, what's going to happen then? Well, the local legislature in that state is going to take some action, and they're going to send that action down to be executed by the Board of Supervisors or the county commissioners, and they're going to say, that property didn't pay tax, so levy the tax, see if you can collect the tax. If you can't collect the tax, confiscate the property and resell it. So when those properties are resold, that gives you a great opportunity because they're resold for 10, 20, 30 cents on the dollar. Well, if I can buy something for 10, 20, 30 cents on the dollar and sell it for more than that just by looking at it, well, then I sort of know whether I have a profitable business. I like that business rather than waiting for the market to go creeping up or waiting for the stock market with the emotions of it to go up and down. So I like the business because I can look at it right now and say, I can make X dollars on that. Now, am I always right? No. But if I can buy a property for 10, 20, or 30 cents on the dollar, think about it. I just got a 60, 70, or 80% discount. I can probably make some money if I can get a 60 or 70 or 80% discount. All right, so this business, for me, started out with rental properties. Then that grew into buying a 50-unit apartment property, which I kept raising the rents and raised the value. That led to buying 100-unit apartment properties. I raised the rents, increased the value, to buying 300-unit properties. Again, I raised the rents, and I could move the value up. All right, the challenge is each one of these properties takes a lot of management. All right, now when I say a lot of management, a 300-unit apartment house could have anywhere from 8 to 14 people working on the site. That's a pretty big payroll. Think about all that. That's a lot of grass to cut. That's a lot of water going. It's a lot of swimming pools that have to be cleaned. But the point is, management can be the headache. So that's a big headache. All right, so the apartment business will always be around because it's a major part of the economy. All right, because it's a major part of the economy, that means it's going to be a good business. The other side of that is it's also somewhat emotional in that people always want to try to get landlords to instigate rent control. So the politicians are always hammering on people and creating risk by saying, we're going to have rent control. Well, if you have a rent control apartment, that's limited your upside. That limits your money all the time. You don't want to do that. So apartments can be just absolutely crushed with rent control or anything that has to do with regulations. All right, every time you put regulations in place, it costs the investor a lot of money. It doesn't cost, those politicians are giving someone else's money away. All right, so money is going to be difficult to make in the future. It's not going to be like the traditions we had in the past, where you could put some money in the bank, make a nice solid 10%. It's not going to be that. It's not going to be like buying a mutual fund or one of those things and know exactly what you're going to do, 5 or 10 years down the road. The market and the stock market is volatile. The real estate market moves very slowly. So which is better? Is real estate better than the stock market? I don't think so. The stock market is very good because you can make money quickly. However, if you can make money quickly, that means you can lose money quickly. All right, so altogether different risk factors in those two things. Now, depending upon your age and where you started in life, you might be able to recall that they had very low interest rates. So if you bought a property and you had a low interest rate, and then you could slowly bring the rents up, and you had a fixed interest, well, then that fixed interest meant your mortgage stayed the same, but the rents kept going up. Now you had a cash flow machine. That's what apartments are. They're cash flow machines if you can have an interest rate that's fixed. If the interest rate is not fixed, you've got a challenge on your hands because the bank will raise, every time the rents go up, the bank will raise the interest rates up. It's going to be very hard to make money. All right, so prices will continue to rise because we will continue to have inflation. Inflation is the government printing money and stealing from the senior citizens. That's right. Takes all the senior citizens' money away because they keep raising prices and they can't buy things because the prices are too high. All right, so the good news is that rents generally continue up. All right. The good news is the stock market does go up, but the bad news is it can come down pretty abruptly. Now, I'm not suggesting that the real estate market can't come down either, okay? So it's all depends on the management on the real estate, and it all depends on the management on a business. What do I mean by that? Well, does the chief financial officer know what he's doing? Does the president of the company, the CEO of the company know what he's doing? Is the board of directors trying to make more money for the stock investors? You've got a lot of people working for you in the stock company. A lot of people. Chief financial officer, CEO, all the board of directors. Are they doing a good job of management? They don't always do a good job, do they? And if they don't, and you own the stock, well, then you know the rest of that story. It's going to be the first one that everybody's going to want to sell. And when people are selling, it pulls the market down. So 30 years ago, I discovered a business that I could look at what I was looking at, and I could see what the price was, and then I could compare that with a retail price. So that was basically tax liens and tax deeds. So in the decades that I've been doing that, over 30 years, I've found that I can look at a property tax auction, I can look at the property, and I can know right then and there if I'm going to be able to make money. But I can decide what I'm going to pay for it. And I can decide what I think I can sell it for. If I can see that margin, I'm seeing it right now. I'm seeing it in real time. I know whether I can make money or not. That's a good business for me, and that's a good business I've been teaching for 30 years. Office buildings, I can't predict what they're going to be worth, but I know they're going to go up because rents will go up. Apartments, I know they're going to go up, but I don't know how much. And so they might just creep up, but they go up. With a tax lien and deed business, I can look at it immediately and know exactly what the price is and know what I can try to sell it for. So you're kind of getting the idea. All right, now the banks, what are they doing? They're paying very low interest rates. So the alternative of putting money in the bank has now disappeared. Why has it disappeared? Are you going to put money in the bank at 1% when we already have 5 or 6% inflation? Well, think about that. That means you're losing 5% a year. Now, does that mean they're throwing 5% of your money away? No, they're just raising the prices so high that you get 5% less. So every year the car is going to cost 5% more. Well, think about that. All right, that's not going to do you a lot of good if you have to buy into the market, because when you go to buy, you're going to have to pay the real price. All right, so what do the stock market investors, people, what do the financial investors tell you? What do the CPAs say? What do the financial planners say? What do the investment advisors say? They say the market should go up traditionally 7 to 10% a year. Now, that's what they say. Does it always do that? Well, I don't know. Sometimes I see it goes up 20 or 25%, but what if it drops 30? All right, that's the stock market. It's volatile. You have to be ready for that. So keep in mind, these people are making estimates. So I don't work very well in that environment. So I like an environment where I can look at the price, what it is today, or what I think I can buy it for, and look at the price, what I think I can sell it for. That gives a lot more certainty to the investment. All right, so the challenge in the stock market is there's a lot of ups and downs. You've got to have someone else controlling your money. Okay, what about real estate? Real estate's very good, but it's a more longer-term investment, all right? You're not going to make money quickly unless you're in tax liens and tax deeds like I am. You're going to make money because you're going to hold it and for a long time. For example, your folks bought a house. When they bought it, it was $200,000. Now it's 20 years later, and it's $400,000. Yes, the house did go up, but what does inflation do? Well, inflation went up right along with it. But generally speaking, real estate keeps up with the inflation. All right, so do you want to control it, or do you want to watch it grow slowly? It's going to be up to you. All right, the question really is, why is real estate better than stocks? I don't think either one of them is the best. I think they're both good, but it's going to take an education. Now, you're going to have a lot of faith in the stock market. You're going to have faith in the CEO of the company. You're going to have faith in the board of directors. You're going to have faith that the market's going to go up. And you're going to have faith that you bought the right product. What if the product goes out of favor? I mean, they don't make stagecoaches anymore, right? They don't make typewriters anymore. What's happened? Those businesses have all changed. Well, if you were in IBM and they were building the typewriters, well, you'd say, wait a minute, that's not going to work in the future. All right. Whereas real estate, it's a little bit different. It's more traditional. People hang around longer. I don't know. Is the management any better? That's the big problem with every investment. Is the management any good? So it's enormous if you don't have faith and you don't have good management. All right, so my name is Ted Thomas, and my comparison is simply this. It's not why is real estate better than stocks. Real estate and stocks can both be good, but they're both going to take an education on your part. If you're the kind of person that can handle the ups and downs, the stock market is great. People make lots of money in the stock market. I didn't say they don't lose money. All right, real estate market is a much more stable market, takes longer to make the money. I personally chose a market 30 years ago after being in a slow-moving real estate market. I got in one where I can buy low, I can sell low for a profit, and I can do it quickly. So that's called tax defaulted property and tax lien certificates. Okay, now right below me is a free gift for you. So before you go there, I want to tell you, if you're going to go to these auctions and learn how to buy tax defaulted property, you need to make sure that you've looked at those property. If you haven't had boots on the ground, don't buy it. It could have been a hurricane, could have been a fire. It might be next to a chicken farm, might be next to a pig farm. Wow. If you don't know what that property's next to, you don't want to buy it. Why? Because how are you going to sell it? It's going to have a problem. So you want to think about that. The second thing I want you to be careful of is be careful when you get to the auction. Don't try to win the auction by bidding the prices up. Look at the property. Know what your exit strategy is. The key to the business is know your exit strategy. If you know what your exit strategy is, that'll determine how you're going to buy that property. My name is Ted Thomas. Right below me is a free gift.